concerns caused by the macroeconomic figures issued this week have exerted considerable pressure on the US dollar. Although the greenback maintained its dominant position, it updated its lows against its main rivals. It seems to be just the beginning of the greenback's weakness, and the fact is that the US labor market is cooling, inflation is sliding, and the business activity in the manufacturing sector dropped less than anticipated. In this light, the Fed's forecast for the first key rate cut was shifted to November or even September. Markets suppose that negative reports may force the Fed Reserve to launch monetary policy easing earlier. Curiously, next week, officials of the Fed Reserve, the Bank of England, and the European Central Bank will deliver speeches. In the first 3 days, there will be more than 15 statements. Some officials will speak 2 or 3 times, while President of the Fed Reserve Bank of Atlanta, Raphael Bostic, is declared in this list as many as 4 times. The politicians' views will hardly change in just several hours. However, fresh macroeconomic reports may affect the overall situation. Let us figure out events that are worth your attention early next week. You are watching Traders Calendar. On May 20, Germany will disclose its producer price data. Although forecasts seem optimistic, in April the indicator may add just 0.1% compared to 0.2% increase in March. Nevertheless, the positive dynamic will continue after a slump to minus 0.4% in February. Thus, any figure above zero will be positive for the Eurozone and the single currency. And this means that the euro will try to put pressure on the dollar. On Tuesday, the market situation will be influenced by the consumer sentiment data issued in Australia, as well as the minutes from the country's central bank meeting. The main response to these events will be seen in the currencies of the Asia-Pacific region. The Australian dollar and the New Zealand dollar are likely to strengthen if Australian consumer sentiment reverses its downward trend and meets the forecast of at least 0.9%. However, the Reserve Bank of Australia minutes also released that day might contain arguments for lowering interest rates. In the event of this, the Australian dollar will weaken against its American counterpart. On the same day, the US dollar might gain support from its northern neighbor. Canada is set to release its inflation reports. According to the forecast, the indicator will shrink to 2.8%. If that happens, the Canadian dollar will decline, pushing the USD cut pair higher. However, later this day, the United States will publish data on its crude oil inventories. And given that previous reports unveiled a drop of twice as much as expected, this week might see a repeat. As a commodity currency, the Canadian dollar might retreat slightly against the US dollar. On the same day, the Eurozone will publish its trade balance report for March. Until now, the figures have been growing at the fastest rate since December 2020. In March, imports fell by 8.4%. In contrast, exports advanced by 0.3% year-over-year, and the United States, the United Kingdom, and Norway accounted for most of the growth in exports, while Russia and China saw a decrease. Given the weaker economic indicators in the first group and ongoing issues in the second, the forecast for the Eurozone's trade balance to reach around 27 billion euros might not pan out. In this case, the US dollar could rise against the euro. Also, in the middle of the week, the May 22nd, Japan will release its trade balance data. In March, the balance shifted to surplus of 366 billion yen. This was the first surplus in 3 months as exports rose and imports fell. The strongest demand came from the United States and China. If the predictions from Japan's Ministry of Finance hold true, it will confirm the economy's resilience. However, the yen's reaction is likely to be indirect and neutral. The publication of inflation figures in the United Kingdom will affect the euro indirectly, but the currency will hardly remain intact. According to estimates on a yearly basis, consumer prices in the United Kingdom will drop to 2.7% from a 3.2%. In such a case, the British pound may lose value, thus affecting the euro, and the greenback is likely to benefit from the situation again. We will monitor the market reaction to the above-mentioned reports. Subscribe to the channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcome. We wish you profitable trading and see you soon.